Good morning, and thanks for joining us on today's episode of our daily crypto news podcast. We've got a packed show for you with some exciting updates on the future of institutional adoption in the world of cryptocurrency.
That's right. And we're starting off with some big news. Bitcoin's recent milestone of reaching $100,000. Now, many of us might be thinking that this is the culmination of years of hype and anticipation, but according to industry veterans like Samson Mao, CEO of Jan3, this is actually just the beginning.
Exactly. Mao claims that previous Bitcoin bull runs were usually muted because exchanges needed to onboard and were backlogged for months. But now, with the infrastructure in place, we're witnessing the start of real institutional adoption. And this trend has the potential to fundamentally transform how global capital markets work.
That's a massive statement. If institutional adoption is indeed on the horizon, it could mean a seismic shift in the way that global capital markets operate. I mean, think about it. Trillions of dollars worth of potential real-world assets could be tokenized and traded on blockchain rails.
Absolutely. And that's exactly what Peter Gaffney of Blue Water Financial Technologies is saying. He believes that the right systems and processes need to be in place to properly tokenize these assets and create a full-fledged secondary trading market.
So we're looking at a future where anything from real estate to art and collectibles could be traded on blockchain. It's exciting to think about, but also raises a lot of questions about regulation, security, and scalability.
Which is why we'll be diving deeper into these topics throughout today's episode. We'll be exploring the challenges and opportunities that come with onboarding institutional investors and tokenizing real-world assets.
And we'll also be examining what this means for the future of cryptocurrency and blockchain technology. Will we see a new wave of adoption, or will regulatory hurdles hold us back? We'll be discussing all of this and more, so stay tuned.
And don't forget to follow us on social media to stay up to date on the latest news and updates from the world of cryptocurrency. Now, let's move on to our next story.
We just discussed how social media influencers can have a significant impact on the price of cryptocurrencies. Well, it looks like Dave Portnoy, the founder of Barstool Sports, has done it again. He recently tweeted about a new Solana meme coin called Greed.
Yeah, and it seems like his tweet had the desired effect, at least initially. The price of Greed surged after Portnoy's endorsement, but it later plummeted by 75%. Portnoy then revealed that he had sold his holdings, claiming that he had warned his followers about the potential for a pump and dump.
That's right. Portnoy tweeted that he could have cashed out with a profit of over $1 million, but instead he let the price drop before selling. He also claimed that he didn't make a dime from the sale and that he poured the profits into another project called Jailstool.
It's interesting to see how Portnoy is using his influence to manipulate the market, but also trying to distance himself from the consequences. He's essentially saying that he's not responsible for the price drop and that his followers should have known better.
Well, speaking of market manipulation, it's worth noting that this kind of behavior is exactly what regulators are trying to crack down on. The SEC has been warning about the dangers of social media influencers promoting unregistered securities, and this case seems like a prime example.
Absolutely. And it's not just the SEC that's taking action. Other countries are also starting to regulate the crypto space more closely. For example, Brazil has just approved the world's first spot XRP ETF.
That's right. The Hashdex NASDAQ XRP fund is currently in the pre-operational phase, but it doesn't have an official start date yet. This is a significant development as it shows that Brazil is taking a more permissive approach to crypto regulation.
Yeah, and it's also worth noting that this ETF is a spot ETF, meaning that it will track the price of XRP directly. This is different from futures-based ETFs, which track the price of futures contracts. Spot ETFs are generally considered to be more accurate and less prone to manipulation.
That's right. And with the growing interest in crypto ETFs, it's likely that we'll see more countries following Brazil's lead. This could be a major development for the crypto space, as it would provide more mainstream investors with access to cryptocurrency.
Absolutely. And it's also worth noting that this could have a positive impact on the price of XRP, which has been struggling in recent months. With more institutional investment flowing into the space, we could see a renewed interest in XRP and other cryptocurrencies.
As we were just discussing, it seems like every major player in the space is looking for ways to innovate and bring in new users. We saw that with the recent uptick in blockchain gaming, and now it seems like Telegram is getting in on the action.
That's right. The popular Telegram game Zoo has started its airdrop claim period for the upcoming ZOO token launch on the Open Network, or TON. Users can now claim their earned tokens inside the Telegram mini app, and the best part is that claims are handled off-chain for now, so users won't have to pay any fees.
That's a smart move. By handling claims off-chain, they're making it easy for users to get on board without having to worry about extra costs. But I did notice that once the claim period ends on February 25th, users will have to claim on-chain and pay a small fee of 0.1 ton, which is about $0.35.
Yeah, that's still a relatively low barrier to entry, especially considering the potential upside of getting in on a new token launch. And speaking of new opportunities, I wanted to bring up a recent article about the potential for high-yield crypto-backed loans.
That's an interesting topic. We've talked before about how traditional finance institutions are looking for ways to engage with crypto, and this could be a great way for them to do so at scale.
Exactly. According to Ari Pine from Blockfill, BTC-backed loans could be a game changer for traditional finance institutions looking to get into crypto. And with the new administration's positive stance on digital assets, it's an opportunity that's definitely worth exploring.
I agree. The crypto ecosystem still isn't fully integrated with traditional finance, but innovations like crypto-backed loans could help bridge that gap. And it's not just about the institutions, it's also about providing new opportunities for individuals to get involved in the space.
That's right. By offering high-yield loans backed by crypto, lenders can provide a new way for people to earn interest on their digital assets, while also giving borrowers access to capital that might not have been available otherwise.
It's a win-win situation, and as the space continues to evolve, I think we'll see more and more innovative solutions like this that bring together the worlds of traditional finance and crypto.
Absolutely. It's an exciting time to be watching the space, and we'll be keeping a close eye on developments in the world of crypto-backed loans and other innovative financial solutions.
So we just discussed the growing institutional interest in the crypto space and how it's driving the market forward. Building on what we discussed earlier, it seems like traditional finance investors are becoming more confident in Bitcoin.
That's right. According to recent filings with the Securities and Exchange Commission, TradFi investors poured $38.7 billion into Bitcoin ETFs in the fourth quarter. That's 3 times more than the previous quarter.
Wow, that's a massive increase. It's clear that institutional investors are starting to take Bitcoin seriously as a store of value. And it's not just the amount of money that's impressive, but also the fact that it's happening through traditional investment channels like ETFs.
Absolutely. This trend suggests that the crypto market is becoming more mainstream and that traditional investors are starting to see Bitcoin as a viable investment opportunity. And it's not just Bitcoin. Other cryptocurrencies are also starting to gain traction in the institutional space.
Speaking of mainstream adoption, I came across an interesting story about Myriad, an on-chain prediction market, teaming up with Paris Blockchain Week for their Start and Block competition. Can you tell us more about that?
Yeah, it's a pretty cool initiative. As part of the event, Myriad will run a community contest on its decentralized prediction market where participants can make predictions about the outcome of the Start and Block competition. The competition itself will feature hundreds of crypto startups competing for a share of over $10 million in funding.
That sounds like a great way to encourage innovation and engagement in the crypto space. And it's interesting to see how decentralized prediction markets like Myriad are being used to facilitate community involvement.
Definitely. It's a great example of how crypto and blockchain technology can be used to create new and innovative experiences. And with the involvement of Paris Blockchain Week, it's clear that the crypto space is becoming increasingly interconnected with the traditional tech and startup ecosystem.
Well, it's exciting to see how these different trends and developments are coming together to shape the future of the crypto market. We'll continue to follow these stories and bring you updates as more information becomes available.
And in the meantime, we'd love to hear from our listeners. What do you think about the growing institutional interest in Bitcoin or the use of decentralized prediction markets in community competitions? Let us know on our social channels, and we'll discuss some of the best responses in our next episode.
As we wrap up today's show, I want to circle back to the crypto industry's pushback against the IRS's DeFi broker rule. We discussed this earlier, but I think it's worth revisiting in light of the recent market rebound.
Absolutely. The Blockchain Association's letter to Congress, signed by 75 crypto companies, is a clear indication that the industry is not going to take this lying down. They're arguing that the rule is overly broad and would stifle innovation in the DeFi space.
And it's not just about the DeFi space. This rule has implications for the entire crypto market. If it's allowed to stand, it could set a precedent for further regulatory overreach.
That's right. And it's interesting to note that this is happening at a time when the market is showing signs of resilience. We saw a rebound today with Bitcoin and Ethereum both posting gains.
Not to mention the fact that stocks hit an all-time high and Google is exploring Bitcoin. It's clear that institutional interest in crypto is still strong despite the recent downturn.
Exactly. And I think that's what's driving the industry's pushback against this rule. They see the potential for growth and innovation, and they don't want to see it stifled by overly burdensome regulations.
So what are the key takeaways from today's stories? First, the crypto industry is not going to take the IRS's DeFi broker rule lying down. Second, the market is showing signs of resilience despite the recent downturn. And third, institutional interest in crypto is still strong.
That's right. And looking ahead, I think we can expect to see more of the same. The industry will continue to push back against regulatory overreach, and the market will continue to fluctuate. But overall, I'm bullish on crypto's prospects.
I agree, and I think our listeners should be too. As always, we encourage you to do your own research and stay informed. Thanks for tuning in to today's show.
And don't forget to follow us on social media for the latest updates and analysis. We'll be back tomorrow with more news and insights from the world of crypto.
Until then, stay crypto savvy
and keep on hodling.